All right, my name is Darren Joseph from HCJ.Tax, the team that seeks to demystify the sometimes confusing world of cross-border taxation. And today we have the honor and the privilege of having a conversation with Roger. Roger, can you please introduce yourself?
Hey, Darren, how are you? And hello, everyone. My name is Roger Chi. I'm the CEO of the Singapore office for 1291 Group. We are based in Zurich with 13 offices around the world. Zurich, Geneva, Liechtenstein, London, Panama, Bogota, Sao Paulo, Mexico City, Dubai, Hong Kong, and most importantly here in Singapore.
Sticking with the cost element.
Yep.
I know you said 1% setup, 1% ongoing.
Yep. Or less.
But,
yep.
or less. But from your point of view, is there like a threshold below which, even though it's 1%, it may not be worth your time, or you're going to...
We're quite open, right?
Anybody can come. Yeah, anybody can come.
Yeah, so look, I mean, I think, usually maybe we start at 5 million for these types of structures. And a lot of times I even have cases where I've done it 2 million, right? Everybody. So I think, it's a very accessible type of a structure. Lots of different nuances to it, but we've been doing it for a long time, right? And that being said, we have, these structures can go as big, I have some clients as big as 500 million, right? And everything in between. So it's not just for the very, very big or for the very, very small. It's sort of for everybody. And it's a very flexible structure, and it's very easy to use. I think a lot of times people will compare these things to, let's say, a trust or a foundation or an offshore company. Correct, yeah. Right? Correct. The thing is, each thing does a different thing, right? So it's an apples and oranges comparison, to be honest with you. In my mind, a trust is very good for succession planning, right? When my kids are 18, they get this. My grandkids come up, they get that. But if you want, a tax blocker, if you want, some of these privacy or asset protection things, a lot of times that trust is no longer there, right? Because of CRS or FATCA and CFC rules, it sees right through these different things, right? And for example, a U.S. trust has its own tax ID. It pays capital gains tax. It pays income tax on any trades you make. So you can layer a trust with a PPLI, right? The trust will take it, help with succession planning, but also help you with the estate tax issue. And the PPLI helps you with the capital gains tax issue. So it's different. You layer the different things. Each one does its own heavy lifting for different things. And so there's lots of cases where you may want these structures in combination. And then below that, you actually may even want a Singapore company or an offshore company, a PIC, for example, a private investment corporation, or a California LLC or Delaware LLC, just a holdco of some sort, which then holds your underlying assets. And that way, you just move your assets around, right? Not holding the underlying assets. So with these, in this day and age, it's not an either or anymore. It's an and structure because it's so complicated these days.
Yeah. Understood. But it's generally, taking a step back, it's a structure or tool for one generation down. Because once there is, a trigger, the passing of the person who's
insured person.
It's no longer in existence, right? Or does it
correct?
Continue?
So yeah, so exactly. So there's a trigger event with these types of structures, right? So it's not indefinite, right? Or not 100 years. A lot of trusts either 100 years or they're indefinite, depending on jurisdictions. With this, there is a trigger event. There's a life insured, right? So it's based on someone's life. Once that person's passed away, there's a trigger event and there's a distribution to the beneficiaries, right? But the beneficiary can actually be a natural person, your children. It can be actually a trust. And that's what we actually recommend. Yeah. You can go into a trust of some sort. It can be even to a family holdco. So some families have a family office that's set up, that's in a family holdco. You can distribute to that. But a lot of times we say, look, have it distribute into a trust or a standby trust. The standby trust actually has those letters of the instructions that you want beyond the grave, right? So the distribution process. And then once it gets distributed, day one, day two, you do another PPLI on the life of the second generation. And then you keep repeating, right? So there's lots of different sort of variations that we can do. And then sometimes we cannot even, do the trigger event, not off the first generation, but off the children right away. There's certain cases where you want that to happen, right? Or you can do joint life, second last to die, right? So I can do myself and my wife and whoever last to die, and then the trigger event happens, right? Or myself and one of my oldest son, and then the trigger event happens. Lots of different combinations for different use cases. This gets quite esoteric and customized, and that's why we're here to sort of help you walk you through that process.
Okay, thank you for that.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.